I hope everyone's doing well and welcome back to another video. So yeah, very interesting title today. I'm sure it grabbed attention from a lot of you guys. So I'm not going to disappoint. We'll get straight into it, right? So of course, the title of the video is how I got #1 on MyFundedFX leaderboards, right? I can start by seeing here. No, I'm not lying. I am #1. It's a bit nuanced. I'm #1 on the 10K category. This is one of my copy traded accounts. I was having a really good start to the year. As you guys know, I'm #4 overall at the moment. And I realized that, of course, across all my accounts, I'm doing well. But on this, I had a multiplier. So then I've decided to just go ahead and hammer a few extra trades on this separately to see, how far can I really take this. So of course, I'm #1 for the 10Ks. Over here, we're not that far off of overtaking potentially even to first overall, but we'll see, right? That's not the aim anyways. The aim is to just trade how we trade and the rest will follow, right? So cool. Now, what I want to talk to you guys about today is the sort of very realistic and transparent expectations of how you can possibly achieve something like this. So rather how I done it specifically and how, the leaderboard specifically, right, can be a mixture of luck, timing, blah, blah, blah. There's a lot of factors to it. But rather how you can just trade well and potentially, actually make a good bit of money on an account. Because if this was a bigger account, this can be a crazy amount of money. Even on a 10K, this is, to a lot of people, this is a great amount of money, right? So it's not bad at all. And 17% is a lot of percent to me. It's not something that happens all the time. It's one of the, probably the first time ever I've been on the leaderboard, right? But what I wanted to show you guys, and of course, like I said, speak about, is sort of like the realistic side behind it and how you can sort of, run up to these numbers potentially following a certain good things, or rather, if you're having a good run, how to ensure you sort of stay on that good run and when to cut it, right? So cool. As you guys can see, so if you go on here, everything that I'm showing you here, you guys can see for yourself, right? Only 55% win rate. That's not special, right? That's nothing crazy. Now, you see win rate is very nuanced. Some traders will come to you and be like, oh, I've got 80% win rate, 90% across how long, right? Realistic is, if I trade for 2 weeks and I take 3 trades, all of them hit, I can say, oh, I'll go 100% win rate. Yes, technically I'm right, but that's not really what people want to know. So anytime somebody tells you about a specific win rate percentage, always take it with a pinch of salt. How much data are they using to give you that percentage, right? If somebody said, oh, across 2024, I had 60% win rate, that's a reasonable thing to say, right? Because they have the data to back up. Now, another thing you guys will realize, how can I only have 55% win rate, but still be 17% in profit? Right? That's not an amazing win rate. So how have I managed to, So like I told you guys, this is very nuanced. What's important is when you take a loss, right? Even if it's a 0.1% loss, even if it was a $1 loss, it's going to count as a loss on the system. So you can never get too hung up over this number. The same way something that you've closed at $3 profit is still going to count as a win. Even though it's negligible, that's, break even. That's not really a result by any means. Now, the reason, right, and the biggest reason, the thing that we're going to focus on to start with, is risk management, guys. For those of you already following me on my socials, on my Snapchat, on my Telegram, you've seen me bang on about this for the longest, right? And I showed some of you a screenshot of some of this earlier as well. But I'm going to quickly just scroll down through the trades and you guys will notice something. Right? I want you to notice in these numbers, pay attention specifically to the red numbers, yeah? These are all the trades I've taken on account. Lots of, sort of normal trades, lots of small scalps. Still keep paying attention to red numbers. And that's it. That's all 3 pages, right? 23, 98, 59, 12, 43, 25, 81, $91. So I believe, right, just from looking at that quickly, out of all of those, the biggest loss there, I think, is this $91, maybe. Oh, $98 here. Here you go. So just about a percent, right? The biggest loss on the whole account is 1%, right? At times on this account, right, only very recently after passing a certain percentage, I've even risked 2%. But you guys can see there is no 2% loss on here. There's no complete loss. There's no crazy capitulation, any trade that's absolutely blasted my account. Instead, what you guys can see are lots of small losers. Those are average winners, right? Even the winners 1.70, 1.4, 1R, or 1.2, 2.32. Right, some small winners, some trades. You see with these little figures, these are trades I've potentially been in. Maybe I've cut from them due to news. Some of them, it's obvious they're about to head to my stop loss, so I'll cut them early, or this was a trim stop loss that's been taken out. Right, it's a mixture. And of course, in between, there's some few good winners, right? Especially this one that was actually the one that started the account. Amazing start to the account. Something that wasn't taken on basically every account I have. So I started with 5R on EU. Then from there, you guys can see I had a little bit of a good run. Right, 1, 2, 3, 4, back to back, decent trades. Couple small losses, then another winner to make it all back on more. So cool. Now, this is why this is so important, because a lot of people think that you need to risk a lot to make a lot, right? Inherently, yes, if you risk more, you can potentially make more, but you can also lose more. Trading is not just about make more. It's about something called capital preservation, right, guys? Logically, right? A lot of people just don't think of it that way. They just think trading is a tool to just make more money. Of course, we're here to make money, but you also want to reduce or minimize how much you can lose, right? Now, let's see it this way. When I had this account, it started on, of course, fresh balance, 0%. I've risked 1% and I've smashed it on my first trade, made 5%, I'm 5% up now. Taking a few more trades, I'm all of a sudden, as it was shown, if you go to the first page, with 3%, that's almost 10%, right? Just off the jump, very, very quick in a couple of days, yeah? And from here now, I sit there and think, okay, what's the next step? Like I said to you guys, it's always about context. I'm not trading every single account I have with all these trades. I'm not saying all of my accounts are on 17% because it's not smart. It's not smart to do that, right? When I've had a healthy start on some of the bigger accounts, especially, and this is real money you can secure, you can just wait till the payout. You don't have to try and run it to the max on every account and, make it out like you're going to hit the lottery on these accounts and that's it. You're never going to trade again. No, there'll be more plus, there'll be more weeks. So if you've had a good start, now you see this money in front of you, just request that payout or just wait till whenever your payout day is and let that money come to you. That money, right, whatever money, even this money that's being shown on this account right now is not my money until it's actually with me, right? Until I request my payout and it comes to my crypto wallet or my bank account, whatever it is, it's not my money until then. These are just numbers on the screen. So you want to make sure, right, once you're in a position, you actually have this profit, that you're not just letting it stay as numbers on the screen, you're actually getting something from this, right? That's very important. So, of course, now back to this capital preservation. I know I'm up, let's say 8, 9, 10% on the account. So now I'm very, very comfortable. I can afford to risk a bit more. I could have just called it there, but like I said to you guys, I thought, I've got this 10K. I'm doing pretty well. At that point, I think I was actually on the leaderboards as well, just right at the very bottom. Or I think it was showing me at number 11 or 12 or something. And I thought, you know what, might as well trade this. But now, despite me even having that inherent goal, let me climb up this leaderboard, I still did not do anything crazy. I didn't change how I trade. I didn't all of a sudden start risking 5% just because I can. Because I could have, and I would have still been 5% up. But it's important to be smarter than that. You don't want to see it, right? As a trader, generally what you get with noobs is they see one good setup and they think, this is the setup, we're going to go all in on this. That's it. No. That's not how trading is meant to be. You have to, in a sense, diversify your risk. You take a lot of shots because the truth is you don't know what's going to happen every time. Even, very, very simple example of the market. I was so confident that this Friday was going to move lower. Did it move lower? No. But I was very, very, very confident. Like my mentorship chat knows, at the end of the day, we didn't make money off it. We didn't lose money. It's just not the end of the world. But in terms of bias, we were pretty confident this is going to come lower towards this. But it didn't happen. Because really and truly, you don't know what is going to happen in the markets. right? You can be as confident as you want to be, but all it takes is Trump coming and saying one thing, or this news being released, or blah, blah, blah. And all of a sudden, there's a massive candle against you. In fact, right, we can quickly talk about NFP drop. So this is the NFP news that dropped. Very just sideways candle, took out both sides. Nothing much going on. Started looking like it was going downwards, right? Common lower time frame. So it started moving down. Got to about here. Trump randomly comes out and says something about tariffs. That's it. Boom. Just moves one way. And somebody here could have even been sitting there trying to short this, or, you know, whatever it is. And the truth is, if your risk isn't covered, right, if you're not controlling your risk, that can end very, very badly. So back to this point of capital preservation. If, right, logically, guys, think about it like this. Like I said to you, I'm up 10% on an account. If somebody else is in that position, they might be thinking, okay, let me risk 2, 3%, you know, let's go crazy. And even if I make 1 hour, I'm going to make 3% back, 6% back. It's true. But would I rather go from, let's say I'm on 10%, take a loss and go down to 9%, or would I rather take a loss and go down to 7%? Logically, what are you going to be comfortable with? The 9%, right? Because if I go down to 9% and I'll wait for my next setup, all it takes is one more winner and I've made back that loss and more. Now, whereas if I take a 2-3% loss, I need to risk equally as much to make that back and make more on top. But if I now drop back down to 7% and I decide, okay, you know what, I'm going to go back to 1% risk, I now need to hit a 3R to be back in that same position. Essentially, guys, what I'm saying is, if we look at our account balance, right, let's say this is your account balance at 0. What is happening is you take a winner, smashed it, right? Take another winner, smashed it. Took another winner, a small loss, maybe a retracement, then another winner. And now you take a bigger loss, right? Let's assume this is about a 1% loss. Now from here, right, you see how you're still in a good position. Look where you started, look where you are. Now imagine instead of 1%, you had risked more and you end up here. Now that's a bit, you know, that might potentially play with a lot of people's psychology, because they might think, oh, I was all the way up here, now I'm about halfway down, I have to get back there. And the truth is, that's how people blow their accounts. That's how people end up getting chopped up and all sorts, right? Very, very basic things. So even if you're up and you're comfortable, of course you can afford to risk more, right? Let's just say, theoretically, I was in these shoes. I was 10% up. I decided, you know what, I'm going to risk 3%, lose the 3%. Me, someone who's a bit more seasoned and disciplined, I would say, okay, cool, that's it. I'm just going to take the 7% payout, no more playing around. It's going to play with my mind. I already know. I'm not saying I possess the ability to be ultra disciplined and I'm going to slowly grind back. No, you don't even need to do that. Just secure the 7% done, right? But of course, I know I don't even want to be in that position. So then I make sure that from here, I risk 1%, that's fine. I'm over here. If another good setup comes, I'll risk another %. If I lose it, I'll be about there, right? If I win it, I'll be back there. And that's what happens, right? And then from there, higher, whatever. And as you guys can see with the losses, it was just very small retracements and just back up, right? And that is how you can sort of play the account, is what I would call it. Now, with this, what you guys should be taking away is that what's more important than anything, even more so than the trades I'm taking, right? Because that should be a given. That's a default thing, that the setups you're taking are good setups. You shouldn't be taking silly trades. You shouldn't be trying to, you know, catch crazy or if it happens, it happens. But what's most important is trimming that risk. Now, I'm not going to go into giving you guys examples of trade breakdowns, blah, blah, blah. All the trade breakdowns are on my YouTube. You guys can go watch those. In every single trade breakdown, I outlined to you guys, this is where we trim the risk, right? This is where we're going break even. This is where, or even if we hadn't done it yet, this is where we intended to trim the risk once price moves away. Now, like I said, of course, I've had a good run. Every single one of those trades that I've shown on the YouTube will be there in the trades, and of course, more trades on here, because I told you guys I've been scalping it, right? But that's all it is, guys. Now, again, like I said, I'll be transparent. to a degree, this is luck. I've just had a great start, and I'm a person that's disciplined with risk. So I've, managed to keep that going. Taking small losses, taking very average winners, and it's just gradually gone up. That's how I've ended up on 17% at the top of the leaderboard, right? And now the actual payout on this account, I believe, is on the 13th. I can request it. So from here, really and truly, I could keep going, or I could be sensible and just call it. I'm going to be honest with you guys, I probably will keep going. In my mind, I've got a soft stop loss limit. If I manage to get to 15%, I'm only going to risk 1%. But if I get to 15% balance, that's it. I'll call it a day. If I don't, we'll keep going and see where we end up, right? So cool. I think that essentially covers the bulk of it. I know a lot of people probably expected to open this video and drop a crazy method about trading and this and that. The truth is, guys, your sort of methods and your strategies are not as important as this. Being smart with your risk allows you to be wrong and still make money, right? A good example of that is, for example, we'll just make up one really quickly, right? Let's just assume I was short from here. Previous daily high sweep, we're going to short it, right? Not a setup I took, by the way. But let's assume I was short and I was, super confident. Oh, we're going to go to our sell side target over here. I'm going to cover, this is going to be the stop loss. This is the position. Now, this is where a lot of people go wrong. They're just a make or break. They just think, okay, this is my stop loss. I either get stopped or, it hits my target. That's it. No, that's not all you should be doing in trading. If you're in the position, you need to be managing risk. If I am seeing displacement to the sell side, then at some point, my point of invalidation will change. Essentially, the point will become, a bit lower. Let's say after a little while, you trim your stop loss to about half. You trim it to here. Because then what it should be, right, is that if this stop loss gets hit, it's very likely it's taken out this high anyways. So why not take the loss at 0.5% instead of trying to take it at 1%? Or rather, if it's displaced away enough, you might even just go break even. So now, imagine even if it took me out and it ran my way, of course, that's extremely frustrating. But I didn't lose anything. That's the main thing. You'll live another day, you'll trade another day, another week, another session, right? That's what you guys need to focus on. If you truly want to make money and you're profitable, you need to make sure you're not wasting ammo on very shit trades. And when you are deploying capital, when you are putting risk on the table, you're taking setups, they're good setups, but most importantly, any opportunity you have, any sensible opportunity you have to trim risk, you're doing it. You don't want to be one of those people, yeah. Either, of course, it's important to find a balance, right? Go back quickly. Where, you enter the position, the second the position moves away, you just go break even. Of course, you're still not going to lose much, but in some cases, it's possible price comes back to your entry or even just goes a little bit beyond it and then runs. So you always want to be logical. If you've seen the displacement away, then fair enough. Do your trim, go break even, whatever it is. But if you don't have a reason to, then don't do it, right? Again, if you guys want a lot more specific, I would go through all the trade breakdowns from the start of this year, and they cover, lifetime examples of exactly why, when, etc. Right? But I think that pretty much covers it all. I know this is probably a boring video, not exactly what people were expecting, but honestly, guys, if you can take this advice in and understand, right, sometimes you can be wrong, you can have conviction and the trade completely goes the wrong way, but if your risk is managed, it will never hurt you. Don't take trades on sunny days, right, when you know you shouldn't be trading, and especially don't risk more than you should be when you're not in a position to. Understand this, I was 10% up, I still didn't up my risk. I know people potentially starting 2% up and now they're suddenly setting 2% risk and doing all sorts of silly stuff. You don't need to do that. 1% risk and being very, very disciplined and sharp with what you're doing can take you very, very far, right? But yeah, guys, that is about it for this video. If there's any more questions, right, if you guys do want more specifics about trading generally, like in terms of entries, blah blah blah, whatever it is. Again, I recommend the trade breakdowns, but past that, if there is anything I didn't cover or any questions you guys have, please let me know, and keep an eye on this. We'll see what we can do next week. Can definitely catch these two. We'll see if we can push for that top spot, and it'll be on my Snapchat, Telegram if we do manage to make it. But yeah, guys, any questions, any help I can give, just drop it in the comments or in the Telegram chat.